Now we're joined by Garth Bray from Business Desk. Garth, good morning.
Good morning, Ryan.
Bit of a come down.
Yeah, well, hey, look, he was interesting. I watched that. It was really interesting.
He was, wasn't he?
Yeah.
Because the problem is, yes, we're going to get growth, and I don't mean to sound ungrateful, Garth, because we are going to get growth, which is what we want. But it's not like we're, as he talks about, it's not like we're going to take off, and that growth is almost a rebound from where we've been, rather than we will continue that way for 10 years.
Yeah, if you look at that, like the house price growth they're talking about, it's very, very sustainable is the new buzzword. Sustainable basically means bugger all.
Yeah,
you know?
exactly.
It's probably music to the ears of the politicians who don't want to see them take off by too much, because that'll leave everybody behind. But for those people who are feeling that that's an important part of how they feel wealthy, that's not a huge news.
So for people at home, Garth, you know, it looks like this is the end of the cutting cycle. Is that a fair thing to say?
There were a lot of questions around that yesterday, because obviously there's a fair bit of money out there in terms of the mortgage market that's been sort of sitting on floating rates, going, gosh, should we jump now? Should we price out longer? I am not qualified to give mortgage broking advice. I would always go and see a professional about that. Might do, actually. But the point is, I suppose, that if those rates, if the easing cycle seems to have stopped, and I think the indication now there's about a 20% chance at this stage that there would be a further cut in February 18, when they come back after the summer break under a new governor. And so that suggests that some of the 40% of mortgages that are probably going to roll over in the next couple of months will be fixing at different rates. And Karen Silk, the Reserve Bank Deputy Governor, was saying basically, look, you've got a great opportunity there, that the margins are back where they should be relative to wholesale rates. So banks they're making a healthy gain on that.
Yes.
There's scope, plenty of capacity for a bit of competition, not a mortgage war, but just a good
healthy dose.
Yeah.
We're speaking to Antonia Watson from Chief Executive at ANZ after 8:30, so we'll ask her about that then.
Yeah.
Now, export prices holding up well. This is what, again, from the Reserve Bank, and we saw that from Fisher & Paykel Healthcare yesterday.
Yeah, I mean, obviously they are our Nvidia, if you like, one of our huge market darlings, and they cracked $1 billion in revenue for the first half for the first time, which is a great number. I think, what are we talking about? $213 million worth of net profit after tax. It's above guidance, so their full year guidance is lifted again, largely on currency. We've got a very relatively weak dollar at the moment, although it jumped about 1% yesterday on news that the easing cycle was probably over. So, and interesting, they're not making huge changes based on the tariffs. They've sort of priced that in at about $16 to $17 million worth of impact, and they're just trying to sort of stick to their knitting and continuously improve, rather than get too freaked and flaky by changing events.
Now, finally, Air New Zealand bosses having a crack at airports about giving Jetstar some sweetheart deals.
Yeah, look at Nikhil Ravichandran, the new CEO. He's been in there for 5 weeks. I know you spoke to him earlier in the week. I don't know if he dropped this little bomb in there, but he was talking about...
No, we dropped plenty of other bombs, Garth, but this particular one wasn't dropped.
He's obviously picking his audiences, maybe. So this one is aimed at the airports for offering sort of extended or not time-limited discounts to Jetstar, basically, on landing fees and other kinds of deals. And he's saying, it's fine if you're introducing a new player to a new line or a new market or whatever, but to just sort of offer open-ended discounts, that's outrageous. And we're the national airline, but we're all, a commercial airline, but also, part of critical infrastructure, sort of, Air New Zealand CEOs do sometimes wrap themselves in the flag. And I guess the counter to that's come from the Airports Association saying, come on, this is absurd. We're talking about $10 to $20 on the cost of an airfare. That doesn't justify how you have to pay $1,000 for a return here in some cases.
100%.
I guess the point is they are just sort of cherry-picking the main 5-6 routes, your Auckland, Wellington, Hamilton, Dunedin, Queenstown, Christchurch, not the regional routes that Air New Zealand has to cover as well. So a bit of an interesting choice to have a crack at that one.
Because you can see how it would feel unfair to Air New Zealand, because they basically have to pay more on the main trunk lines. Because if I fly now and I'm going Auckland, Wellington, I will more often than not fly Jetstar, because I'm a last-minute booker, and it's an $800 versus a $200 decision.
I mean, a big part of this that they can't control is obviously the engine troubles that they've had that have really slammed them, and that limits their ability to sort of offer more.
They're still years away from having those resolved, unfortunately.
So I guess it's have a whack at something you think you might be able to control.
Garth Bray, Business Desk.